Is this a new era for crypto and US trade relations? Hi, everyone. I'm Maggie Lake, and today I'm talking markets with Noelle Acheson, author of the Crypto is Macro Now Substack. Hi, Noelle.
Maggie, so good to talk to you. How are you?
It is so good to talk to you. I am doing well. We are all just, I think, this feels like the longest week. I feel like I've said that already in 2025, but we have just so much news coming at it. You and I were just chatting before we came on air, and I'm asking a question at the top: is it a new era? Not for one thing, but for multiple things, because that's how crazy this news flow is. And just today, we came in with investors so worried about tariffs. And then halfway through the day, again, news coming out, the market's swinging around. There's just so much uncertainty surrounding all of this. How are you wrapping your head around it?
And the headline hits are just accelerating. Don't you see that? Don't you feel that as well? It is getting really quite exhausting, but at the same time, it feels super important. And keeping up is matters more now than ever because we are entering in a new area. To answer the question up at the top, we have been for a while, but always when the pendulum is about to shift, things start to accelerate, and it feels like that is where we are now. I mean, just this week alone, and seriously, to think it just started a couple of days ago, it feels like eons. This week alone started with not only a massive trade war of the likes we haven't seen since the Second World War, but also the new phase of military alignments. I'm talking to you from Europe, as you know, and with the United States basically just pausing aid to Ukraine. That's the war over. And while we can celebrate that, the way this is being done, obviously, is a bad taste in everyone's mouth.
Yeah, I'm sure it's so helpful and useful to talk to people sitting all around the world and get lots of different viewpoints because it feels different depending on who you're talking to, and investors need sort of all of those perspectives, I think. Let's start, first of all, with the tariff situation. We'll kind of try to run through all of the news. We did see that big swing. Listen, I talked to folks yesterday, and they pointed out that we saw a big sell-off. We stabilized a little bit, bouncing off 200-day moving averages. So some of this could be technical. And yes, they were relieved that autos seem to be getting a carve out for now. But there's so much uncertainty. How are you thinking about the tariff situation in terms of the economy? Because I know even in the ISM survey, which came out, so many executives are concerned about it and just really concerned about how can they plan when they can't see the future. They just don't know what the future holds.
I think the key is actually in President Trump's speech before Congress last night. He actually said there might be some pain, and which you basically can interpret to mean there's going to be quite a lot of pain, but you got to suck it up. We got to get through this. And it's smart to get this over with now when he has a majority and when he does still have the popularity that brought him to office. So it's smart to do it now. It's smart to rip the Band-Aid off. It's smart to get the pain over with fast. And while I definitely I get the argument, I understand, I actually believe in the argument that the global macroeconomic balance needs to be realigned. It wasn't sustainable. This is going to cause a lot of pain for a lot of people in the short term. And what I'm more concerned about, obviously a lot of concern about the economic pain, but I'm concerned about the geopolitical realignment that will be the consequence of that economic pain.
Yeah, and that is what so many people are having a really hard time gaming out because we just haven't been in quite this situation before, and we saw the different responses. I think a lot of investors are holding out hope that there is negotiation and that there'll be diplomatic solutions. But China talking pretty tough today, so a lot remains to be seen. What's the state of the economy right now two questions? What's the state of the economy, and do we think that hit from the tariffs will show up immediately, or will there be a lag?
I'll answer the first question. The first question, what's the state of the economy now? And that's a very good question. Nobody actually knows because we're getting signs of a slowdown. We're getting signs that there's still some strength. I mean, just even in the ISM PMIs, manufacturing showing some signs of a slowdown, services still doing really pretty well. And even the S&P PMI figures were revised up. So it entirely depends which part of the economy you're looking at. Often, I've always kept when you do your pros and your cons on one side of the ledger, there's your pros, what's going well in the economy, and then the cons, what's going bad in the economy, and both lists are generally full every single time. I think Maggie,
Yeah.
oh, there you are. You're back.
And I know we're using a different Some people said that the apologies if the link in the email wasn't working today. We're trying a new platform because, as you know, we've been dealing with some audio issues, so we're trying this one. And so, yeah, sometimes we're on the screen single, so not to be alarmed. I'm also
Okay,
in.
so you didn't disappear. All right,
It
that's good to know. I
didn't
think, okay,
disappear.
I can
No,
talk
we're
about this
on
for a
training
while
too.
on my own, no problem. So, okay, good
I
to
know
know. Good to know.
we're just keeping you on your toes. I'm also, as you can all tell, remote. Again, I'm in the city. I'm in Manhattan, which is packed, by the way, and I'm going to uh, an event tonight with a lot of women in finance, a lot of women in crypto and digital assets, and some of them are very good friends of Noelle's. It's a small world, so
I'm
I'm
so
super
jealous I'm
excited.
not going to be there. So
I know.
jealous.
I'm super
Good, a
excited to
good
catch
bunch
up
of
with them.
people.
Yeah, they are, and they're working on some really interesting products, and they're all really on the innovation side of things. But I'm curious to hear from them about what's going on, and we'll get to that in a second. But yeah, so back to the economy. Yeah, so
Mm,
there are mixed signals, and
yeah.
that service side was reassuring today. We have a big jobs number coming on Friday as well, and the ADP private payrolls were weak. Uh, the jobs part of the economy is really important. And that even if you have your job, if you see layoffs coming, it can put a real chill over sentiment.
Yes, and that pulls a chill over whether you're going to be buying a house or a car and things like that. So it does trickle through. Um, I wouldn't be surprised to see weakness on Friday. The ADP doesn't always, hint. It doesn't always mirror what we see in the official reports, often, but not always. The thing to bear in mind is we're not going to be seeing just yet the impact of federal layoffs because that takes some time to work through the system, severance and grace periods and all that. What we will see right away is the impact of the federal hiring freeze. And government jobs have always been a pretty hefty chunk of any increase, any payrolls increase every single month. We're probably not going to get that. There may be some from legacy, but we're probably not going to get that this time. So I wouldn't be surprised to see it undershoot. And that is, of course, going to pile on to the concerns that everyone already has. That's one of the reasons we're seeing the bond yield drop. But to answer your other question, as in when are we going to see the impact of tariffs show up in economic figures, arguably we already are. One of the reasons the Atlanta Fed GDP Now model was so brusquely adjusted downwards on Friday and again on Monday is because of the net imports surge. And that was partially purchases being brought forward in anticipation of tariffs. It also had a lot to do with the gold stuff that we've spoken about before. So it's already arguably showing through. And even in the ISM comments, everyone's concerned about tariffs. Some of the price increases that we've seen in the PMI figures, both for manufacturing and services, are because those who can raise prices are doing so in anticipation of having higher input costs. So, but the big hit, we don't know what that's going to look like once, how much can businesses absorb the additional costs, or how much are they going to be able to pass on to consumers? It's slightly different this time round than last time round because consumers are expecting higher inflation, as we've seen in many of the survey figures, and also as we're seeing in the tips market. They're expecting higher inflation, therefore we're going to increase prices because it's what they're expecting, right? Last time that wasn't the case. Last time inflation was very low, so it was harder to pass them through. So the tariffs, in my opinion, are going to be very inflationary, and that is really going to mess up not necessarily the bond market because that's focusing on something very different now, but Maggie, you've seen the inflation expectations go up. We've seen indications of price stickiness, if not outright price increases, and yet the 10-year yield is coming down. You would think it would be going up because inflation coming back means Fed funds will be climbing again. No, we're seeing a bond market that is much more worried now about growth than inflation, which is strange because we're seeing Fed officials say that if the Federal Reserve has to choose between supporting employment and controlling inflation, inflation takes priority.
That is really interesting. The bond market, the bond market has been moving quite dramatically. If they are sensing a recession, are they ahead of the Fed?
Who knows who's going to be right? The bond market has often been wrong before when it comes to anticipating Fed decisions, and it's now pricing in, go figure, CME options are now pricing in more rate cuts this year, and up to 3 cuts for this year, which again doesn't make sense with indications that inflation is going to be increasing. We actually are, for the first time, seeing Fed officials openly talk about the risk of inflation from tariffs. It'll be interesting to see what Chair Powell says on Friday when he speaks at a monetary policy conference. He'll probably dodge the question as usual, but this is real. This is happening. And that was the big shock on Monday or Tuesday, it's all blurring now, when we knew the tariffs were coming. Trump has said they were, he wasn't going to be, and then they actually did. This is a shock that, yeah, this is actually, it's real. There's no walking back. It's not just bluster.
Yeah, we have a couple of questions coming in. I want to get to them. I have a few more as well. So, and some great ones. It's great to see everybody in the chat. Someone just said Darren finally made a live show. We're happy you did too, Darren. So Mark is asking, is German and Chinese stimulus the start of something that will boost risk assets, or are there too many other forces?
I think there are too many other forces. I mean, I wish. One, so I'll speak about the Germany first. One, it's going to take some time to actually come through to the market. What Germany did with the changing of its fiscal debt break and its fiscal approach is epic. I mean, that really, I think, is one of the biggest changes that I've seen in economic policy since, well, apart from what is happening in the United States. It's epic, let's just say. And in my opinion, this is going to sound a bit harsh, but it is the best thing that could happen to Germany. Germany has been stuck in a rut for a very long time. It has been held hostage to internal political interests, and its infrastructure has been deteriorating. I haven't been to Germany. I have to correct that, obviously, but I know people who have recently. I have friends there, and the infrastructure is old. It's decrepit. It's decaying. The train stations, things like that. So having to spend more is going to be great for the German economy, but I don't think this is going to send risk assets to the roof because they are spending more on actual things. It's not going to find its way into markets. They need to boost their industry. They need to boost their munitions manufacturing above all if they are going to meet their goals of military spending, not just for the NATO commitments, but also because the United States has pretty much said to Europe, you're on your own.
Not making its way into risk assets, but what about equities? We've seen a lot of interest and enthusiasm around European equities because you've got a combination of low valuation and also now this need to spend in order to, as you say, deal with the defense situation. And once you take that sort of budget cap off, the requirement of a balanced budget, basically, you may open up for other investment as well. Will that be a positive for European equities, especially versus US equities?
It'll be a positive for many European equities, obviously not all of them, because there's still the threat of tariffs, which, let's face it, are probably going to be hitting in April at some time in Europe. So it is going to hit many. I remember on Monday looking at my screen, everything was red except for 3 things: the DAX, the German index, because of defense spending, gold, and the VIX. And I remember looking at this thinking, oh, this is just not a good sign. When you've got defense spending, safe havens, and volatility indices, the only things that are going up, and it's a very loud sign of the times. So yes, it will, but will it go through to risk assets? Not so much, because this is not about consumption. This is not like China's situation, and we'll get to that in a second. It's not like China's situation where they just need to get consumers to spend more. It's about targeted investment to boost the manufacturing base, which Germany was struggling. We've seen layoffs from Volkswagen, from Daimler-Benz, from ThyssenKrupp, from Commerzbank. I mean, Germany was collapsing, and this was one of the biggest threats to Europe. It's one of the reasons the polarization led to the surging popularity of the AfD, and the AfD, one of their campaign platforms is, let's take Germany out of the EU. And can you imagine the chaos that would cause? If the manufacturing base doesn't turn around and actually get people more into the center, then it's very likely the AfD will win the next election. So this matters. It also feeds back to the geopolitical realignment that I mentioned earlier. But going back to China, that's a very different situation. And that could have some filter through to risk assets, because that is about getting people spending again. I'm also of the opinion, Maggie, and this is just my opinion from scrutinizing the Asian press every day, I do think China is going to come up with a crypto framework this year. It has acknowledged that crypto assets are here to stay. It has acknowledged that there's a lot of activity going on under the surface. It has said that it wants to be able to control what is going on. It has passed laws recently acknowledging crypto as property and creating some sort of defining framework around them. In other words, it's starting the steps that you would take if you wanted to establish a crypto framework. And it makes a lot of sense. They're not going to be embracing it wholeheartedly, but surely they would much rather that crypto activity in China was carried out on platforms they can keep an eye on
Hmm.
and make sure that no one's using it for capital flight and things like that. And that would unleash a huge wave of demand in crypto markets. But also, I think because of the stimulus that they need to get through to consumers, they actually would be okay with a little bit of animal spirits returning.
That's
I watch as a proxy for risk appetite in China. I watch the Macau gambling revenues, and they're up.
That's really, really interesting. So, as with everything we're talking about, there are so many nuances, and all of these are complex, right? Because I've seen all the enthusiasm toward Europe and European equities, and I understand the valuation argument and the fact that there will be spending. But we certainly have Europe bears out there. I just want to mention, right, and the energy vulnerability, the lack of political cohesion. The fact that they're tied together through the euro, they can't control the currency. There's so many things that you will have it. Plenty of people. Certainly, the last time I spoke to him, Doomberg would have been one of them. Although I haven't talked to him now since we've seen this lift on spending. Caught up with him in the very most recent news flow. And the same with China, right? It's very interesting what you said about crypto. I just finished a very, very interesting interview with Alexander Stahal, who's a very long-time commodity person, did a very deep dive into China. That'll come out in the next couple of weeks, everyone. I'll let you know. He had really, really interesting things to say about China. He's very concerned about the economy there. But as you say, there are lots of things going on with the Chinese government trying to deal with that. So it's so complex. Do you think the crypto part of it is fascinating? Do you think that would help the broader crypto market? Because it's such a closed economy and they control everything. Why would that boost the broader crypto market? I can't see the Chinese letting control over anything out
because
past
it's
their border.
Yeah, simply because it's massive. It's a huge market. And even if Chinese retail investors put just a teensy little bit of their portfolios, their savings into crypto, that's a massive inflow of new money.
Mm,
And it's always, Maggie, it's always, always, always new money that drives any bull run. This would be new money so there's a lot of investment going on under the table in the offshore exchange, etc. But not that much. The Chinese do have a respect for authority. So the fact that it has not been approved has kept the vast majority out of these markets. Also, the Chinese market has a different attitude towards risk assets. I mean, gambling has been a part of their culture for much, much longer, and they don't really understand the difference between gambling and investment. They don't really, you have children for your pension. You don't necessarily need to have a pension fund. And so we're going to
that's
see some changes there. It's the reason it would impact the crypto markets is that it's massive, and this is a very big difference, a Bitcoin is a Bitcoin is a Bitcoin. Doesn't matter if you're buying it in Shanghai or in Kinshasa or in London.
Absolutely. So you think they would open up toward something that exists already, as opposed to creating their own or having it be something that is just very singular to China?
They're going to do that as well, and they already have with the Chinese digital yuan. And China has a vibrant blockchain ecosystem. It has done a lot of
Mm,
really good work. It's got some strong labs, and it has a big tech push as one of its economic pillars for the 5-year plan. And part of blockchain does feature in that. Metaverse features in that. I think it was a year ago, China announced a special plan to encourage more metaverse development. What that means, I'm not quite clear, because I think they use the term metaverse, and obviously there's some translation issues here. I think they use it in a very different way than we would use it. We in the West would think of metaverse as gaming and
yeah.
culture and things like that, whereas for them it's industry specific, automation, metaverse, that kind of thing.
That's so interesting. Lena pointing out Hong Kong is very active in the crypto sector, has its own ETFs. This is where Noelle's note, for me, is Substack is so valuable, because you're really tracking all of these projects everywhere around the world and what everyone's doing from the sort of financial innovation standpoint. not just a
Trying to
trading
trying to keep
standpoint.
up. Trying to
Yeah,
keep
I
up.
know,
There's
but
so much
you do
going on.
such a great job of these projects that most of us just are not able to sort of see in the general news. So highly
But
recommend.
going back to a question I didn't answer, I think it was Ralph or Mark who asked it about whether the German stock market, for instance, was now more attractive than the US stock market. And this is the answer would be yes, because of the growth potential. Whereas what's the growth potential in the US, especially if what we have coming is thinner margins because of tariffs, and then, of course, the austerity measures from the slowdown in federal spending. So this relative potential is basically what drives markets. And that's one of the reasons I think we're seeing the dollar come down. This is another contradiction in markets today, because normally with tariffs, you would see the dollar go up. That's the narrative. Tariffs means you're going to need more dollars, and also the trade imbalance. Dollar goes up when tariffs get in. It's not, it's coming down. And why? Because I think of what's going over in Europe. I watched the DXY index, and the second largest component of that is the euro. So what happens to the euro is very material there, even if other weights may be moving differently. And this is a fascinating, is this a new era? Maggie, think of, we have austerity in the United States and easing in Germany.
What? I know. I keep waking up and saying, is this J and J is asking, what does Noelle think we've already seen the top of this cycle, or could the fabled alt season still happen?
It will still happen. We have not yet seen the top. This is my opinion, obviously, but I see no evidence that we're even near the top. We're in a pause of the bull run. One metric I keep an eye on is Bitcoin dominance. Bitcoin dominance is, you can look it up on TradingView, which is what I use under the symbol BTC.D, and it measures the percentage of total crypto market cap that is Bitcoin. It's over 60%. This is unusual. And this is relevant because at the early stages of any cycle, the early stages, Bitcoin is the asset. It is the on-ramp for the new money because it is the most liquid. It is the one that has the greatest variety of products and on-ramps, et cetera, et cetera. It's the safe crypto asset outside of stablecoins. So when Bitcoin dominance is climbing and or high, you're in the early stages. As the market matures, as Bitcoin is going up and people are making a lot of money and they're feeling more confident, then they move out the risk curve. Then they go into altcoins. We'll see some rotation from Bitcoin, lock in the profits, and then just take on extra risk because people are feeling more confident. And so when you see Bitcoin dominance start to come down, that's when alt season is beginning. However, it needs to come down a long way for me to be able to say we're in alt season. And I do think that could be a while away because, again, you got to have the animal spirits for that. We haven't really seen that yet.
So it's interesting because I think people thought that was happening because of all of the enthusiasm in the Trump administration. You pointed out again in your Substack today that there's a crypto summit happening on Friday at the White House, and it seems like it's just waving the green flag, all systems go in terms of crypto, embrace of crypto from the very, top seats of power in the US.
Yes, definitely. But which asset is this going to most favor? It's probably most going to favor Bitcoin and ETH, I would guess. Bitcoin because of the rules that are relaxing to allow the entrance of institutions who want institutional custody. There are many institutional grade crypto native custodians that have been doing an excellent job. Coinbase, for instance, custodies the Bitcoin for the major ETFs. But many, the large investors would probably rather use BNY Mellon or State Street or Citi or their custodian that they've always used. One, because it's familiar. Two, it's because they don't have to re-architect the back office. And three, because they're not going to get fired for doing that. So once we do see the announcements, and we've already seen many of the large custodians that aren't already doing so announce that they're going to be offering crypto custody, that's the kind of validation that the really big money that has not yet stepped in will need to move some of the new money, which, as I said before, is what moves us to the next phase of the cycle. And the new money will come in then. So that's really what we're hearing from Washington, D.C. these days. There's a lot of talk. There's a lot of support. It's happening much, much faster than most of us expected. It's really, really exciting. And at the event you're probably going to go to later, you'll be talking to many people that didn't think they would be able to build in the United States. Now they can. That is really, really really exciting. But it's not enough to trigger altcoin season just yet. We saw on Sunday, President Trump Truth Socialed that the strategic reserve was going to include a list of altcoins. He named three: Ripple, Cardano, and Sol. And of course, the market went absolutely crazy on a Sunday. There's low liquidity, and you've only got the crypto natives active on a Sunday. But it was such a strange thing to post. It really was. He then corrected that an hour later, 2 hours later, I think it was, saying, "Oh yes, oh by the way, also Bitcoin and ETH," because we were all scratching our heads, thinking, has his account been hacked? What's going on here? But that could have, some were saying this is going to trigger altcoin season, but most of us were saying this is not going to happen. We're going to see this walked back because it makes absolutely no sense whatsoever. However, it was a glimpse at the kind of support for non-majors, the majors being Bitcoin and ETH, the non-majors that many investors are looking for. My opinion is it's just way too soon for that.
Well, I think that this raises a concern that I saw in a lot of places coming from folks in the crypto community who, rather than applaud that, were concerned about the announcement and saw it as a negative for the overall environment. Why was there so much pushback on the idea of a strategic reserve? Was it the idea of a strategic reserve, or was it the way it was done?
Both. It just made no sense at all. I'm not in favor of the idea of a Bitcoin strategic reserve. This is an unpopular opinion among Bitcoin investors, but I'm really not. One, because it's not good for the United States, and two, because it's really not good for Bitcoin. Why would the United States want a Bitcoin reserve? The reason I get told most often is because it will help support the dollar, and I don't understand that at all, because why would moving away from the dollar support the dollar? Why would the US government basically transmitting to everyone that they don't even have faith in the US dollar, why would that support the US dollar? And it would not be good for Bitcoin, because we really don't want the largest government in the world, wading into this asset, because where does that lead next? It leads to a desire to maybe influence the code or maybe control some of the functions, etc. It's just there's no way this would be good for absolutely anyone other than people who really care about the price going up. And let's face it, crypto is about much more than that. But when you're going to throw in assets that don't have much utility, Sol has utility. Sol has a thriving ecosystem. I can understand at a pinch getting Sol in there, but XRP and Cardano, nobody really knows what they do. They don't have very much activity that doesn't come from their own traders. And so why on earth would the United States of America, the largest economy in the world, need a strategic reserve of tokens with an unclear utility?
Yeah. There's also a question. I'm very curious. What do you think is going to come out? What would you like to see come out of this crypto Whitehouse summit? Is it just a sort of press event or a messaging event, or are we expecting real news to come out of that?
I have no idea. I'll be totally honest.
I know. I basically just asked you to
I
read
have no idea.
Scott's mind. I apologize for that.
No. It's no. I love the question because it highlights nobody has any idea. One thing we are keeping a close eye on is who is invited, and this is in flux. The invitations have gone out, and there have been acceptances and confirmations from a surprising range of attendees. I'm very encouraged by the range of attendees that have been confirmed. It includes obviously CEOs of large exchanges such as Coinbase. It includes large investors such as the heads of Multicoin, and I think there's another one in there. It does also include founders of some smaller projects, and it includes those that have just been in the industry for a long time, such as David Bailey, the CEO of the Bitcoin magazine. So it's an intriguing range. What I haven't seen is confirmation, and again, maybe by the time we finish this conversation, maybe it's already come through, that the CEO of Ripple will be there. So, or the co-founder of Cardano. I haven't seen their confirmations yet. Maybe, who knows? It's early. It's only Wednesday, right? I have no idea what day of the week it is. But who is there is going to be relevant. Does that hint at what we're going to see come out of it? I'm not sure, because the legislation will be decided by Congress, not this group. And if indeed, as Howard Lutnick has said, we're going to be announcing a Bitcoin strategic reserve, he doesn't get to decide that. And also, I happen to know that there is a lot of internal industry opposition to the idea. So it's not a given that's coming out of the meeting. It was a strange thing to say. And even if it does, it has to go through Congress, which, let's face it, is just not going to. With the austerity measures, with all the other things that the money could be used for. Yes, let's spend it on crypto assets. I don't even see all Republicans going for that, to be honest, and rightfully so. So what will come out of it? Probably talk, but maybe a coordinated consensus on the definitions, on the buckets, on influence groups. So no idea. I'm hopeful. I'm hopeful they don't announce a Bitcoin strategic reserve for the reasons already described.
Mm.
But the fact that it's happening and the fact that it involves virtually most of the agencies of the U.S. government, other than the central bank and the FDIC, it's intriguing. It's a sign. It's a flag in the sand that this is a new era.
Yeah, it's so fascinating how quickly things have changed, and you're right. You pointed to the progress that most in the industry would like to see happen, which is on the regulation front, on the clarity, on transparency, on the back end, on the banking, as opposed to some of the other things that are discussed. And there's a big education that's going to be going to need to happen with some lawmakers. I mean, think some more than we think are up to speed or quickly getting up to speed, but there's definitely going to have to be a lot more work done, I think, before you start to see some really big moves and big announcements. Does that weigh on the price action? Because we saw the big rally, and then we've seen crypto drift back again, and seem to be hit with the uncertainty that's facing all asset classes right now in this environment. Is that just a sort of natural pullback, or does this feel like something more sustained?
I feel like a natural pullback. Let's say crypto does move with macro sentiment. It is not disassociated from the animal spirits, which are bruised at the moment. Education is key, as you mentioned. It has been for years one of the big barriers to greater interest in crypto assets. That's one of the reasons I was most excited about the launch of the ETFs just over a year ago, was because of the education. When you're seeing BlackRock go out there and educate investors about Bitcoin, that was a very, very big change, much more so, in my opinion, than the on-ramps. That was the validation. That was the let me talk to you about this. That was BlackRock and Bitcoin on the same screen, which again is absolutely mind-blowing. And the education still has a long, long, long way to go because of the number of institutions and the number of professional investors that still think this is for criminals, that still think this is a scam. And to be honest, the recent headlines, such as the Libras kerfuffle in Argentina, the Trump meme coin, and President Trump's post on Sunday, they don't give a great impression of the crypto industry. So understandably, many investors are still reluctant to invest institutional funds and also their clients' retail funds, their pension funds, in this asset class that is tech-based, that is, it has no borders, doesn't have a boss. This is very, very foreign still. And so there's a long way to go in terms of education of the investors. That's when as we progress along that path, that's when we'll start to see impact on the price. And to help with that progression along that path, there will need to be some sort of regulatory framework, some sort of regulatory support. Again, the flag in the sand that this is a new era in the United States. Crypto is open for business.
Yeah, that's such a great point. And that's really what we need to, as with everything, we need to try to cut down the noise, or, and really focus on what's important. And I know that that's going to be really key. For anyone who wants to think about that, I think I mentioned this before. I did a podcast series just recently with Coinbase and Bloomberg, looking at this through the financial innovation. And it was really, really helpful for me to wrap my head around taking past historical references and then seeing how they apply and what people are trying to push forward, exactly what this is for, as opposed to exactly where it's trading. And it was really helpful. So I encourage you to go check that out. You can find that wherever your podcasts are. Noelle, and of course, Noelle Substack, which is where I have had a huge education. So we appreciate you, Noelle. This is really, I laugh all the time, but you're sort of a fortune teller, future reader when you named your Substack, because my gosh, we are really at that intersection right now where crypto is macro and macro is crypto. It's all happening.
So interesting. And again, it's not just the crypto markets. It's not just about the new money coming in. It's not just about the risk sentiment, which is very, very important, but it also ties back to the geopolitical risk that I mentioned early
Mm.
on. Again, gold is breaking new highs because people are accumulating this as a safe asset. Bitcoin is the digital equivalent, obviously, but different narratives are going to be competing for attention depending on any moods. This is something that I'm keeping a close eye on. It is something I'm very concerned about. But geopolitical tension does mean you're going to want to think about the hedge against craziness, because it looks like craziness is on the cards for this year.
And that feels like an understatement. Noelle, it was so great to have you on. Thank you so much. We always love catching up with you. Thanks, everybody, for the great questions and the super active chat. We appreciate you as always. And we will see you again in a couple of days. Hang on to your hats. Be
Thanks,
patient. Be
everyone.
careful. Take care and good luck out there. Bye.